Last week was very eventful, starting with the Fed Chair Jerome Powell testifying before Congress, first before the Senate Committee on Housing, Banking, and Urban Affairs, and then before the House Financial Services Committee. We also had the CPI report come in last week, and then this week we had some labor market reports come in. So in this video, we'll be unpacking the highlights from the hearings, and we'll look at what the data suggests in terms of when we can expect the interest rates to come down. The chairman of the Federal Reserve, Jerome Powell, gave his semi-annual monetary policy report before Congress last week. As mentioned over and over, the Fed remains focused on its dual mandate to promote maximum employment and stable prices for the American people, and is looking for greater confidence that inflation is moving down sustainably toward 2% before reducing the Fed funds rate. This is what Chair Powell said in his opening statement. Reducing policy restraint too soon or too much could stall or even reverse the progress we have seen on inflation. At the same time, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. Over the last year, we've seen inflation come down slowly. Now, the June CPI report, the Consumer Price Index, showed that for the first time in over 4 years, prices actually dropped a little on a monthly basis. Year over year, CPI for all items came in at 3%, while core CPI, which takes out the volatile food and energy prices, came in at 3.3% year over year. This is great news because these numbers were actually lower than what was expected, indicating that the economy has indeed begun to slow down. But we're also seeing this cool down in the labor market. Unfortunately, with the Fed's dual mandate, when they try to slow down the economy to lower inflation, inadvertently the labor market takes a hit. And this is evident when we look at the initial jobless claims numbers that were released yesterday. Initial jobless claims refer to the number of people who have filed for unemployment benefits with their state's unemployment agency for the first time during a specific reporting period, which is typically on a weekly basis. This number rose from 224,000 to 243,000 initial jobless claims this week. Continuing jobless claims, which measure the number of people who continue to file for weekly unemployment benefits, rose from 1,847,000 to 1,867,000. Speaking of jobs, one of the reasons we have high inflation is partly because of government spending. In other words, irresponsible fiscal policy. Senator John Kennedy, during his time questioning Chair Powell, pointed out something profound. He said, about 3/4 of the net new jobs that were created in June were in government, healthcare, and social assistance. 3/4 of the jobs that are being created in our economy can be related directly or indirectly to our spending deficits. Politics aside, government spending is at an insane level. And it goes to show that the labor market wasn't really as strong as it was made out to be. And we're seeing this play out with it taking longer than expected for inflation to actually come down. Now, the market has responded favorably to these developments, with inflation coming down and unemployment going up. Mortgage rates have eased a little over the last week, and according to the CME Fed Watch tool, the likelihood that the first Fed rate cut will come at the September Fed meeting was 93.5% as of last night, which is up from 61.7% just over a month ago. So unless something drastic happens, it's highly likely that we'll see a Fed rate cut in September. Also, next week we'll get the PCE report, which is the Personal Consumption's Expenditures Price Index, and it happens to be the Fed's preferred inflation index. And that'll give us a clearer picture of what to expect. Also, over the next 2 months, we're going to see mortgage rates adjust down ahead of the Fed's decision, since a lot of that gets priced in earlier. If you're considering buying a home, reach out to me and we can look at your situation to see what the best option is, whether it's buying now or waiting a little longer. I would love to help you build a custom roadmap to help you accomplish your real estate goals. Also, if you have any other questions, whether it's mortgage or real estate related, feel free to message me. And also like this video and subscribe to this channel to be notified of other educational content, and share this video with someone that you know that would benefit from this information. Thanks for watching. Have a great day.